Welcome to this video. Today we're going to talk about Beyond Meat. Beyond is back above $1 again, and it's looking really bullish. In this deep dive stock analysis video, we're going to go over the latest news, fundamentals, technicals, and whether a short squeeze might be around the corner. So buckle up and let's dive right in. We're now looking at the charts on TradingView, and we can see that Beyond Meat is $1.04, and the market will open soon. We can see that my average cost price is around $1.70, so I'm currently down roughly 37%, but that's okay. We can see that the 50 simple moving average is below the 200, so technically we are still in a downtrend, but this seems a little bit like capitulation to me, so this could also be a potential bottom. Yesterday we saw this massive green candle of plus 11%, which is pretty good. And this shows a lot of bullish momentum because there was change in management. We'll talk about that later. And at the end of the video, we'll come back to the charts and I will give my personal price prediction where I think the price is most likely to go to in the next few months. So let's continue. Beyond Meat has been under a lot of financial pressure lately, and the stock isn't trading at high multiples, so they want change. And we can read here, Beyond Meat appoints new accounting chief amid financial struggles. So they're hiring someone else who is going to take over certain parts of the job of the current CFO, and he will make better change, apparently. That's the idea. And we can see effective January 12, 2026, Tony will assume the roles of Chief Accounting Officers and Principal Accounting Officer. And he has a professional background in healthcare and biotech and technology sectors. So this guy could bring a positive change to Beyond Meat as a company, and he will be compensated with a lot of money. So they hope that he will make some changes in the company, and the stock reacted very positive to this. That's why we saw this massive gain of 11% in just one day. So we can read here, the addition of Tony provides Beyond Meat with dedicated accounting resources, freeing the CFO to concentrate on broader financial strategy and restructuring efforts. So he's taking certain parts of the job of the CFO, so the CFO has more time to focus on other things. And so maybe that this guy can make a positive change in the company. In short, I think that the investors are positive on this news, and they think that he might be able to bring a positive change to the company. We're now looking here on Guru Focus to get a quick financial overview of the company. We can see that the financial strength is a 1 out of 10, which shows that they have a lot of debt compared to cash. But most of the debt they cleared by issuing new shares, and that's called kind of like printing money. And they printed new shares, they created new shares, and they sold the shares at the market. And that's how they got their money to clear the balance sheet. But that also dilutes the shares. They also lend out like these convertible notes to creditors, which are big institutions. But the institutions have the right to change their notes into shares in the future. That could also dilute the shares, of course. And if we look here at the profitability rank, we can see it's also 2 out of 10 because they're not profitable yet. Their cash flow from operations is negative, so they're burning cash every single quarter, every single year. And their gross profit margins are low, which shows that their cost of goods sold are pretty high and they're not really efficient at the moment. But maybe this company can turn around, and that's what we're all hoping for. We're now looking here on TradingView on the statements, and we can see that the total revenue is pretty consistent. Sometimes it's up, sometimes it's down. So which shows that they are selling products and they sell in over 80 countries. They're pretty good at distributing products, which is great. But the net income is negative, and that shows that they're not profitable yet because their costs are too high. And if we go to the cash flow, we can see that the cash flow from operations is also negative, and that shows that they're burning money. So the question is, how long can this company survive? Well, we need to look at the cash runway of Beyond Meat. So what is the cash runway formula? Well, the cash runway formula is as follows. It's basically, we are going to calculate how long a company can last until it depletes its cash on hand. And this basically means how long survival time they have before they go bust. Well, here we can calculate how long your cash will last at the current burn rate. And the formula is as follows. The cash runway is the cash on hand divided by the monthly net burn. And these numbers you can just find in TradingView or any other financial website. So the first one is the total cash and short-term investments. So we can find the balance sheet latest quarter. And it's 118 million for Beyond Meat. And the net burn is like the cash flow from operations. So this is basically how much money are they burning in the last 12 months. So the trailing 12 months TTM. and that's why we need the period length of 12 months. So then we get a cash runway of 11 months, which means it's a moderate cash position. And that shows that it has 11 months to turn around at the current burn rate. So I think this is plenty of time for a turnaround company. I classify Beyond Meat as a high risk, high reward business. You risk $1 to make $10, $20, or $30 even, or you lose $1. That's how I see it. It's high risk, high reward, very volatile, but it will be cool if it turns around. We're now looking on market beat and we're looking at the short interest ratio and short volume. And we can see that the short percent of float is around 27%, maybe a little bit more now. And this is pretty high actually. And the short interest ratio is 1.3 days. And we can see that the short percentage of float chart, we can see that in the last few months, it has been increasing because the stock really went down a lot. So if this goes like, if it really stays high at 30-40% and there's some good catalyst, then this can create a medium-sized short squeeze, which is great for retail investors. Could there also be a gamma squeeze? Well, if we look here at the option chains, we can see that open interest has increased a lot at the strike price of like 1 and 1.5. Here we can see open interest rate is plus 13,000 and here plus 5,000. And this kind of implies that a lot of people were buying cheap call options. And if the market tends to move higher, then the market makers have to buy all these shares to cover all these positions. And that creates even higher shares, higher stock prices. So we can definitely see a certain small gamma squeeze combined with a short squeeze. As an investor, it's important to know whether we have a margin of safety. So is the company cheap or expensive? Well, they aren't profitable yet, and that's why we're going to use the price to sales ratio. And the price to sales ratio is basically the market cap divided by its revenue. Price is market cap and sales is revenue. And we can see here that it tells us how much investors pay per dollar of sales. So here on finance charts, we can see that the price to sales ratio is around 1.81. And we can see here the price to sales ratio compared to the stock price. And we can see here that in the past, the price to sales ratio has always been much higher than the stock price. So a higher price to sales ratio means it's more expensive, and the lower the price to sales ratio, it means it could be undervalued. So it's always been pretty high. And now here was this massive short squeeze and then you're down. And we can see that now the price to sales ratio is really low at 1.53 and the stock price is only 93 cents. So right now around $1. So based on price to sales ratio, I would say that Beyond Meat is looking attractive right now. Now it's time to find out whether Beyond Meat has still a strong economic moat. Well, if we type in here BYND, we can analyze and we can see that it doesn't have a moat yet. So the overmoat score is only a 3 out of 10, where the intangible assets are still pretty good, but like switching cost, network effect, and cost advantages are very low. And we can see here the strength and risks, like strong early mover brand in the plant-based meats and its partnership with major retailers and food chains, for example, like Walmart. And risks like high competition from traditional and alternative protein producers, a lot of a lot of private companies like Impossible Foods, they actually form a lot of competition for Beyond Meat. So they also have low switching costs for consumers and retailers and weak economies of scale and thin margins. So we're back on the charts again. It's now trading at roughly $1.99 and this trend is still down. But can it go higher? Well, I think that Beyond Meat is still a company with a lot of potential. I think at $1 it's undervalued based on price to sales ratio. The revenue is still clean. They have now new management. Maybe they can become more profitable in the future. I don't think that the probability is high that this company is going to go bankrupt anytime soon, but of course, nothing is a guarantee. That's why I only allocate like 4 or 5% to Beyond Meat. It either goes all the way up or it goes down. So you risk $1 to make like $10. And that's how I approach this kind of investment. I do think that's possible that we can have a second short squeeze, but not as big as this one. I'm planning to hold for many years. So I think that in a few years, we can definitely see higher prices in the future. I hope you enjoyed this video. Of course, this was for educational content only. If you like this kind of content, feel free to like and subscribe, and I'll see you in the next video.